Hello viewers, welcome to my channel. I'm Hasham. So far 8 problems I have completed on computation of income from house property. In this video, 9th and 10th, 2 more problems I'm going to complete. So all the problems are based on the provisions. If you are perfect on the provisions of Income Tax Act, then only the problems will be easier. Otherwise, every problem will be different one. And in this income from house property, most of the problems are similar. Only some 10% points are different. 1 or 2 points are different in every problem. Remaining all points are same. So, before starting the next 9th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points, then I'll explain all the points of 9th and 10th problem. Now, see the 9th one. Sri Atmakaran Reddy owns 2 houses. Their municipal valuation are 30,000, 48,000 MRV. First house 30,000, second house 48,000. The first house is let out for commercial residential purpose for rupees 46,000 per annum. This is the ARV. And the second house is let out to a company to its registered office 54,000 per annum. Whether the house is let out for residential purpose or for commercial purpose does not make any difference. The ARV of the first house is 46,000 and the ARV of the second house is 54,000. Under the agreement, 50% of the municipal taxes are to be borne by the tenant. So there is an agreement between the landlord and the tenant. 50% municipal taxes will be borne by the tenant and 50% by the landlord. Income Tax Act says, if the municipal taxes are paid by the owner, then only it will be allowed. In our problem, only 50% are paid by owner, so only 50% municipal taxes will be allowed as deduction. He claims the following deductions. For the first house, municipal taxes 3,000, but he won't get 3,000. Total municipal taxes 3,000. 50%, 1,500 will be allowed as deduction. Then repairs 12,000, ignore. Brokerage paid to get the tenant 3,000, ignore, no deduction. For the second house, municipal taxes are 5,000, but again 50%, 2,500 will be allowed. Then repairs 2,800, ignore. Rent deed registration charges 1,000, ignore. Annual charges 1,000, ignore. Interest on loan taken to purchase the second house 30,000, but only 10,000 is paid so far. There is no interest on loan on the first house, but there is interest on loan on the second house. Total 30,000 is the interest, but out of which 10,000 is paid. But Income Tax Act says even due amount is also allowed as deduction. It is not necessary that payment should be made. Even if payment is not made, if it is due, it will be allowed. Complete 30,000 will be allowed. Then arrears of rent received from the first house 15,000, which was not assessed earlier. Some arrears of rent were received of the first house, which was not assessed to tax earlier. Now it is taxable. The second house was vacant for 3 months. So there is a rent of vacancy period for the second house, 3 months. Compute the income from house property. So separately we have to calculate for first house and second house. Computation of income from house property of Sri Atmakaran Reddy for the assessment year. House number 1. GAV minus municipal taxes 50% of 3,000, 1,500. NAV deductions under section 24. Standard deduction under section 24A 30% of NAV 13,350. Interest on loan. There is no loan on the first house, so no interest dash. Then we'll get 31,250. First, in working note, we'll find out. GAV is higher of the following 3 amounts. In this problem, standard rent is not given and there is no vacancy period for the first house. For house number 1, no vacancy period. So directly we can calculate the GAV higher of the following 3 amounts. MRV, FRV, ARV. MRV is 30,000, FRV not given, and ARV 46,000. The higher among these 3 is 46. So 46,000 is the GAV, right? Minus 1,500 municipal taxes, 44,500. Minus 13,350, we'll get 31,150. That is the income. But apart from that, for house number 1, there was arrear of rent received, which was not assessed to tax earlier. Now it is taxable. The arrear of rent received is 15,000. But one deduction is allowed, standard deduction, 30% of NAV. So 30% of 15,000, 4,500. 10,500 is the income. Add up 41,650. This is the income from house property, house number 1. It's straightforward. No complications, nothing. Our second house, there are some complications. The first complication is there is a vacancy period. So in step wise, we calculate the GAV. Computation of income from house property, house number 2. GAV less municipal taxes, NAV, standard action, interest on loan, loss we are getting. First, you concentrate on how to calculate the GAV. Step number 1, calculating ERV, which is higher value. In this case, we have not done because there was no complication like vacancy period. Here, there is vacancy period. So, whenever there is a vacancy period, it is better to calculate in these steps. If there are no vacancy periods, straightforward, we can calculate like this. So, here MRV 48,000, FRV not given. So, whichever is higher is the ERV. So, ERV we got 48,000. Step 2, calculating ARV. ARV is 54,000. It is given in the problem. The annual rent of the second house is 54,000. So 54,000. Monthly rent, 54,000 divided by 12, 4,500 is the monthly rent of the second house. Now, adjusted ARV. Adjusted ARV is equal to ARV minus unrealized rent. No, rent of the vacant period. 1 month vacant period is there. So 54,000 minus 4,500, 40,500. This is the adjusted ARV. So there is a 1 month vacancy period. So 54,000 is the rent for the 12 months minus 1 month rent is 4,500. So 40,500 is the adjusted ERV. Adjusted ARV, sorry. Now we have to compare the adjusted ARV with the ERV. The ERV is 48,000 whereas adjusted ARV is 40,500. So here we can write adjusted ARV is less than ERV on account of vacancy period. Then whatever adjusted ARV is there, that itself is the GAV according to the provisions of Income Tax Act. So here 40,500 is less. So 40,500 is the GAV. So here we have taken 40,500. Total municipal tax is 5,000, but 50% is borne by the owner. So 50%. Deduct NAV. Standard deduction 30% of NAV. Interest on loan. Actually 30,000 is the interest on loan, out of which 10,000 is paid. But Income Tax Act says even if it is not paid, it will be allowed. The complete 30,000 will be allowed. So here 38,000 minus 41,400, you are getting negative value, minus. So there is a loss from house property, house number 2. So house number 1, he is having income, whereas house number 2, he is having loss. So we can make intra-head set-off. The set-off we can do. So net income from house property is 41,650 minus 3,400. You will get 38,250. This is the income from house property. This is the problem number 9. Now I am reading out problem number 10. Mr. Vishal Maheshwari owns a house whose municipal value is 1,40,000, fair rental value 1,38,000. So MRV, FRV given. He let out the house to Srimati Parmeshwari for an annual rent of 1,80,000. So this is the ARV. The tenant could not pay the rent of Feb and so was made to vacate the house. And the house remained vacant for March. That means for 2 months rent he has not recovered. The owner has not recovered. February there was unrealized rent. The tenant has left the house without paying the rent. So unrealized rent for February. March month the complete house was vacant. No tenant was there. So 1 month unrealized rent and 1 month vacancy period. As per the rental deed, the municipal taxes are to be paid by the tenant. But Srimati Parmeshwari failed to pay, as such the dues were paid by the owner. Agreement was the municipal taxes should be paid by the tenant. But here in this case the tenant has not paid the amount and she has left. In that case the owner has paid the amount. Income Tax Act says what is there in the agreement. in the agreement it is to be paid by the tenant, so it will not be allowed, even if it is paid by the owner, because as per the agreement it is required to be paid by the tenant. Now municipal taxes are 15%, 15% of MRV. Interest on loan taken amounted to 50,000, loan taken for repairs. Interest paid on loan taken to purchase the house, construct the house, repair the house, renovate the house, or to reconstruct the house will be allowed as deduction. So even if the loan is taken to repair the house, it will be allowed. Compute the income from house property of Mr. Vishal Maheshwari. That's all. One new point is there. During the year, 1 month unrealized rent and 1 month vacancy period. So how to start? See here. Computation of income from house property of Mr. Vishal Maheshwari for the assessment year. GAV, this gross annual value we have to compute in working note. This is only difficult point. Remaining less municipal taxes. No municipal taxes deduction will be given because the municipal taxes will be paid by the tenant according to the agreement. Then NAV deductions. Interest on loan taken to repair the house allowed. Income from house property. Step 1, calculating the ERV. Because there is unrealized rent and vacancy period, we have to apply these steps to calculate the GAV. So first, calculating ERV, which is higher of the following two. Already every problem we are doing, ERV is higher of the following two, MRV or FRV. MRV is 1,40,000, FRV is 1,38,000. Higher among these two is 1,40,000. This is the ERV, expected rental value. Now calculating ARV. ARV means the rent of 12-month period minus unrealized rent. So here ARV, rent of 12-month period is 1,80,000 minus 1 month unrealized rent. During the month of February, the tenant has not paid the rent and left. The 15,000 unrealized. So total come to 1,65,000 the ARV. Now calculating adjusted ARV. So adjusted ARV is equal to ARV minus rent of vacancy period. Here 1 month vacant, March. In the month of March, the house remained vacant. So 1,65,000 minus 15,000, 1,50,000 is the adjusted ARV. Now we compare the adjusted ARV with ERV. ERV is 1,40,000, adjusted ARV is 1,50,000. Now the law says, Income Tax Act says, since adjusted ARV is greater than ERV, in spite of vacancy period and also other factors. Vacancy period, other factors means unrealized rent. That means this 1,50,000 we got after considering the unrealized rent and vacancy period. That's why adjusted ARV will be the GAV. So what is the adjusted ARV? 1,50,000. This itself will become the GAV. So here GAV 1,50,000. No deduction for municipal taxes. NAV 1,50,000. 30% of NAV 45,000. Interest paid on loan taken to repair the house. It is allowed as deduction. 50,000. Total 95. So 150 minus 95, 55,000 is the income from house property. That's all. Now in working notes you should write out, according to agreement municipal taxes are to be borne by the tenant, but as she failed to pay, the assessee has paid. Even then Income Tax Act says it will not be allowed as deduction because as per the agreement it has to be paid by the tenant. Second, interest on loan. Interest on loan taken to repair the house, that is also allowed as deduction. So two problems I have completed, that is 9th and 10th. Inshallah we'll continue the next problem in the next video.